What's up everybody, Tom here with another video. In today's video, we'll be discussing the latest stock market news moving the markets right now. We'll also be taking a look at our technical analysis approach on the S&P 500, Nasdaq, Tesla, Bitcoin, Ethereum, gold, and US dollar. Movements in the US dollar in the last 24 hours have been pretty fierce, and this has a lot of ramifications across all markets. So let's talk about that and more right now. Stay tuned. So what happened over the last 24 hours in the stock markets? Well, interestingly, the same as really what's been happening for the last 2 to 3 weeks since the US election and the vaccine news. Deep value stocks such as the banks and of course energy sectors have been the ones outperforming, and we've mentioned how this happens in recovery phase. I do believe the market is really believing that the worst is over now and we're moving forward, and that's why you're seeing these deep recoveries through of course banks and energy sectors. This should continue for around 3 to 6 months in the recovery area, and then we'll see a rotation back into growth stocks like the technology sector. So don't get too sad about the tech sector yet, it will come back. It's just a standard rotation that happens in the markets. Apple was the surprising one yesterday, down 3%. And when we have a look around the broader markets, a similar phenomenon to what's happened recently has been occurring time and time again. Asian and European futures trading sessions have been bullish. We then get that first kind of bullish hour of trade, followed by selling into the second hour on Mondays. It's a phenomenon that you may want to check out and possibly build strategies around, because it's happened so many times since we've been live streaming, and it happens all the time anyway. Hype and anticipation dies off, followed by a bit of a rally into the end of the day. What happened was, of course, we saw the Dow Jones do the best, led by those underappreciated sectors, S&P 500 0.56%, and then Nasdaq, of course, flat for the end of the day, really led by Apple not doing so well. If we look at the broader sector markets, we'll see energy was the standout, and of course also when we look at this, real estate was actually the one declining the most, with everything else actually trading in a very, very tight band. So it was really all about energy and a little bit of finance yesterday. Let's go about fear and greed though, because things are starting to look up if you pay attention to put and call ratios. I'll just highlight this: 62.3% of volume calls are being opened against puts. And what this is this is one of the highest points that we've seen in the last 2 years, indicating an extreme greed on the part of investors. And that's good. It's actually a very good sign if you're looking at pullbacks in the market. The more buy calls that are opened that can expire worthless, or of course the market comes down against, the better or more likely it is that the market comes down. This recovery is incredibly good in terms of stock price breadth though. So just remember, the recovery actually is looking good with all stocks rising at the same time. And it's not like what we saw during that kind of August-September period where we had a lot less breadth than we do right now. If we scroll down to our oscillator down here, you'll notice that it's reaching really up there towards the 80, and that's very, very high, and we're starting to get into that kind of extreme greed zone. So definitely be careful about the bullish moves that we're seeing in the markets right now, as while there might be a lot of exuberance, the week after Thanksgiving has generally been a relative negative week. So just pay attention to the price action as always, and the put call ratios are important. Now Tesla, we talked about this. It's going to do its own thing. It's in the hype train right now. We just saw another analyst raise the bull case. They're now targeting 1,000 US dollars per share. So pretty phenomenal kind of raise here. And we'll have to see what happens, but that is going to lead to another part of FOMO, I guess, in the markets. Our CBOE put call ratios came in, again, just showing us that there's a huge amount of open interest in calls when compared to puts, and there's been a lot opened of calls over the last week especially. If we take a look at the put call ratio as an oscillator, you can see also it's coming down to our favorite level. What's our favorite level? Down here at the 0.6. When it's reached the 0.6 level, we've generally seen the market kind of fall off at those events. So look for the 0.6, put an alert around this area. It'll be a very key zone for us to be paying attention to in the markets. On to the other markets. US dollar, guys, look at this, 92 held. Full buying pressure comes off 92. Of course, that makes a lot of sense considering how important this zone is. Remember, a daily close under 92 exposes that 89 area on the larger timeframes. And we saw a big buy up in US dollar as people, I guess, started to hedge against some uncertainty coming back into the markets. and it went back to the 92.80. Now, we've talked about this before. Really, the week, what we're looking at is 93. A break close above 93 is going to signal further bullish run into probably 94, as this would be a little double bottom at that point with the intervening peak, obviously. And 92 is well worth having an alert for closes below, or as the case of yesterday, buying off the area or the zone. So it hit the 20 exponential moving average here on the daily, found some resistance, and is now sitting in the middle of the zone. If we go down to the 1 hour, you can see how short and sharp that was in terms of it was a very quick move in only a couple of hours, quickly hit that resistance, and now is hovering below. Maybe it comes down to like a 92.40 today, where previous resistance and the 20 exponential on the 1 hour find some support. If you're somebody that trades in the smaller time frames, that could be worthwhile. It's a pretty standard type of setup after a large, big move. Always interesting to watch US dollar though, and with that big move, it's taken gold to the next level. And what this means is gold has now closed below 1850. 1850, significant support. Let's put that line up together for us. We've talked about this as having a very good level. 1850 buying pressure, 1850 definitely closed below. So now what are we looking at? Well, we're certainly looking at some decent pullbacks that could occur. We've talked about 1800 flat. The reason why is on the larger time frames, there's moving averages there, and that would make sense because it's a $50 zone. Then the next area, really around 1750 down here, where previous resistances will act as support. So there could be some further selling on gold here. And ways you can get into things like this is when you see breaks like this happen, possibly you get pullbacks back to the 1850, where the 1850 acts as resistance and what we call role reversal happens. And basically maybe a 20 exponential moving average comes down as well at the same time, acting as dynamic resistance. So an ideal world is the 20 exponential hovers down here, the market pulls back to 1850, we see a smaller time frame lightning bolt to the short, or we see something like a shooting star or some candle like that, and then further selling comes into gold, which gives, of course, us as traders an opportunity, and then potentially investors to pick up good levels in the future if you're still bullish on gold over the longer term. Really great zone seen today. Similar for silver. Silver got under the 24, and we expect that to probably go more towards a 23 right now, just based on the way that the market has moved previously. Talking about other large moves, we mentioned Tesla upgrade to $1,000 per share. Now that doesn't mean much to me, but it does mean a lot to a lot of people out there. We've really been very bullish on Tesla since it got through and closed above this 463 kind of zone. And as in typical Tesla style, it doesn't give us the conservative entry yet. And all it's basically been doing is breaking out and breaking higher. We're now trading at a post-market 530 handle on Tesla. So not only did it do 6.5% yesterday, but it's traded another 1.66% since that point. Where will Tesla stop? Well, this is always a question we get asked, and it's usually around human psychology. And what I mean by that is Tesla likes 50s and 100s. It's traded by us, the retail traders predominantly, and what do we like? Round numbers. So expect something like a 550 just before 550 to act as some kind of resistance here for Tesla possibly to do a little bit of a pullback, and then if it continues its upward trajectory back to the 600. How do we get into things like this? Well, we have to use moving averages, and we have to find ones that have been respected in the past. So look at these aggressive runs. Even the 4-hour 20 wasn't going to get you into this. It was over here where the reoccurring event happened. And you can always tell these reoccurring events because you're going to get 1 touch, 2 touch supports, and then the 3rd and the 4th and the 5th and the 6th all become valid opportunities. So remember, moving averages are one of the best ways to get into these very aggressive trends if you've missed out. Tesla looks like it's bulling for now, possibly 550 and then even $600. Maybe not the 1,000 just yet. US oil continues its upward trajectory. We've talked about why when it came through this point, it was most likely going to go slightly under our channel range. We're getting pretty bullish moves here. And look at this. We're about to take out this $43 line here from a bullish close. If we get that, where to next? I don't think this resistance of 43.70 means anything anymore. It's most likely going to go our distance, and our distance was trajectorying into around 46. So at this stage, US oil looks good, and this is off the back of course, the vaccine news. Energy sector's hyped. Everything's looking a little bit better for the future. And remember, the stock markets are forward-thinking vehicles. They're always thinking 12, 18 months, even further ahead than what we're seeing just necessarily in the news. So let's now talk about our favorites here, the US 100, US 500, and then of course the cryptocurrencies. What we've got here is US 100 Nasdaq, really stuck within a bit of a range. It's not having the best of, I guess, the last couple of weeks, and that's because of course the vaccine news has forced it into a different kind of sector rotation right now. We've got 11,600 being a major support, 11,800 being a pretty good support as well. And then any points above really this 12,100 will be a very big resistance break, which should lead to further buying back to the 12.4. We'll be updating you on the Nasdaq when we get better levels in the next couple of days. US 500, this is an interesting area. Basically, we've got 35.50 and we've got 35.86 or 85 on the 1 hour in terms of a trap. We've definitely got great support down here at the 35.50, and this top range area has been pretty good resistance as well. We're about to see potentially a close here above this zone. Now, this is the futures contract, and you know that I don't pay as much attention to the futures contracts, but it still is a range, and this is certainly a channel that should be paid attention to. Where does it go from here? Well, if you're taking the range of the channel, you would be using this, extrapolating that out, and then that would take us back to basically these previous resistance highs. So if this holds and we see further bullish momentum coming into the market, and then of course the market opening and going bullish, we could be back at 36.25 first. But that doesn't change that we should be seeing a pullback soon due to an abundance of calls being opened in the markets. Remember, Wall Street likes to make money from us, the retail traders, and if we're all buying calls, which are leveraged shares really, it's more likely that we do see a little bit of a decline there. We'll definitely update the markets when we get some stronger moves over the next 24 hours. Coin continues its really big move up. We go to the 4 hour here to try to figure out what's going on. I think a lot of the money is moving to the altcoins, that is Ethereum, XRP, etc. So Bitcoin, really, if you're a kind of bull here and you're worried about the bearish side, you should definitely have 17,500 support as a key level or key zone. If it gets through and alerts you to closes below that point, I think that could be that really big pullback that we're potentially seeing in the markets here. And then when that does happen, you could see a very quick sell-off all the way back to possibly a 16.5 or a 16,000. Why is this? Well, Bitcoin has this trajectory with it where during these big bull runs, it also has very epic kind of flash crashes followed by huge momentum buys. And I've said this a few times, if we do get a flash crash on Bitcoin, expect it to be bought up quite heavily by the FOMO and the dip-based buyers. We saw that last time back in 2017. We've seen it really every single time cryptocurrencies have gone on a huge run. Definitely pay attention to that. Another thing that a few people in the comment section have brought up has been Lunar New Year. That is Chinese New Year, or the Asian kind of festival, and usually in late January, early Feb time and period. That's been notoriously a very negative time for cryptocurrencies. So just remember, there are seasonals in cryptocurrencies and there are reasons why these things happen. We'll talk about it more on this channel, so definitely remember to subscribe and of course hit that alert button if you find that type of stuff helpful. Let's just quickly talk about ETH. ETH continues to hold this 20 exponential moving average. We've got 1 touch, 2 touches, 3 touches. It's now broken out. We're closed above here 600. So the next target for Ethereum becomes the 700 or just under the 700 range. We're kind of thinking here, same thing really for Ethereum. It's been all about going towards that 800 target. So it's quite far away still, but 800 target is what it did last time. Very, very similar patterns, very, very similar kind of setups. And we still expect that that could be a very likely occurrence after Thanksgiving into potentially, of course, also the Christmas period, as everyone goes home, talks about it with their family, tells everyone how great they've done. And I'm sure quite a few of you have probably done all right as well off cryptocurrencies recently. All right, guys. Well, if you enjoyed this, please remember to subscribe and, of course, hit that alert button. Thanks so much for everybody coming out to our live event yesterday. We do that every single Monday before the stock market opens, and you can ask us any questions you've got about the markets and, of course, things that you want us to have a look at from a technical analysis perspective. Appreciate it all, and remember, as always, make as much money as humanly possible whenever opportunity arises. Bye for now.